boy, oh boy, guys, welcome back to another car ride adventure. So we're going to talk today a little bit about what's going on with SOFI and how they're looking to do a reverse split and just my thoughts on that. This video is more so going to be a talk about my thoughts on reverse splits. Because, I mean, many companies have done reverse splits before. It's not like it's just a SOFI thing. It's just applicable to SOFI right now because they're the ones currently doing the reverse split. Or basically, they're going to be doing a reverse split. That's the word. So, I mean, here's my thought on it. First, we have to describe stock split versus reverse stock split, and I think it's pretty obvious what each one is. A stock split is when, for example, you take a Tesla that was over $2,000 a share and you split it so that the stock price is smaller. But in order to do that, you have to create more shares outstanding to make up for that. It does not change the valuation at all when you do a stock split, and nor when you do a reverse stock split. It's just when you do a stock split, companies tend to do that stock split, just like Google's going to be doing one, and Amazon's going to be doing one, and Apple has done plenty of them before. A company does a stock split normally because they're doing well. It's almost like an indication that they're doing well. So the share price got too big, and now the companies are thinking, oh shit, we're doing good. But some of the smaller guys in retail don't want to buy our stock because I don't care about, what people say about partial shares or, share slices, whatever people want to call it, and whatever different trading platforms or brokerages have for it. I think one of them calls it like, oh, you can buy stock slices. Well, the problem is people don't like that. People want to own a whole share of a company. So if a company like Google or Amazon does a stock split and gets it down to, let's say, like, $400 or $500 a share, whatever the stock price is going, the stock split will be, that's more attractive for someone to buy a whole share at versus, oh, don't hit me, Jesus, versus, 2,000 something a share. So stock splits are normally an indicator that the company's doing well, the stock price grew too much, and normally when the stock split happens, it's always a good thing for the company. But again, it means that you're creating more shares outstanding for the company and you're getting that stock price to be lower at the same time. But what if we're talking a reverse stock split? And then we'll talk about my thoughts on that after. So reverse stock split is when you actually reduce the shares outstanding. It's like a hair floating in my face. Excuse me. You reduce the shares outstanding, and in the process, you increase the price of the stock. So let's just say you did a reverse stock split that's like a 4-to-1, and you had a $5 stock. That would make it a $16 stock, and you decrease the shares outstanding to 1/4 the amount. So my thoughts on it personally, and SOFI is the one we're talking about here, but to me it makes no difference. I hate reverse stock splits. I think it makes the company look weak. I think, there's different reasons it can be done, but really, if I'm being honest, the main reason a company ever does a reverse stock split is because their stock price has gone too low, and they think that it's gone so low that the prospect of people buying their stock has actually gone down. Like they think that their stock has gone so low it's become too unattractive to buy. So a reverse stock split will reduce the shares outstanding but increase the price of the stock. So, I mean, I don't know. I don't like it. And by the way, for those who aren't 100% aware, let's say that SoFi announced, because I didn't look into it too specifically, let's say that they say, okay, the reverse stock split is going to be like a 5-to-1. And let's just say the current share price is at exactly $5. That means that there's going to be 1/5 the amount of shares, and then the share price will times itself by 5 times. So instead of being $5, it would be a $25 stock. So if you have 25 shares, keeping the numbers simple here, if they did a reverse stock split like that where it's 5-to-1, if you had 25 shares, your shares are going to go down to 5 shares, and instead of the share price being $5 or whatever it's at, you'd multiply it by 5. But I mean, yeah, I don't think it's good. I think reverse stock splits, to me, are a sign of weakness, where maybe things aren't going the way the company wanted and the share price looks bad to them, and they're trying to like lift that up by being like, wow, look, yeah, the share price is higher now. And I mean, everyone understands the reverse stock split, but it's a mentality thing where someone sees a penny stock, because SoFi has basically almost been entering, like, you know, they're in single digit and they're like entering penny stock territory, which would be like 5 or under. And I'm thinking that the SoFi, you know, the company, would even consider a reverse stock split, because they don't think it's a good look that the share price is that low. But I think it's a really terrible, you know, and bad sign of weakness that there would be a reverse stock split. I think anytime a company's done a reverse stock split, it's always a really bad look for the company, in my opinion. I think it's a sign of weakness. I think that things haven't been going SoFi's way. We're in a sort of a rough market right now anyways. Add that up with the fact that SoFi is a little bit of a riskier investment. It's not like this really strong, fundamentally strong company that's profitable yet, because it's not. So, you know, you have a mixture of things here with SoFi, where they're not profitable yet. It's a riskier company. This isn't the atmosphere for riskier stocks right now in the stock market, and it's being reflected in prices for some of these higher risk, higher reward companies. And I think too, like, they went down extra because of that whole, like, their earnings guidance. The guidance for their earnings, it wasn't as good as what people wanted it to be and what people thought, because the reprieve for student loans is once again like being relieved, and who knows where the end is in sight for that, you know? So I don't know. I think it's just a culmination of things, and their stock price being low, and they're thinking, oh, well, a reverse stock split will benefit our stock. I disagree. I hate reverse stock splits. I love stock splits, like what Tesla did and what Amazon and Google are intending to do, and make it more accessible for people to buy a whole share of your desirable company, because they are desirable and fundamentally good. But a company like SoFi, it's just a high-risk, high-reward company. People are going to buy your stock or they're not. If they see the vision, and first of all, I'm personally not invested in SoFi currently, but, you know, if people see the vision for your stock and your company in the future, they'll invest. You trying to trick them with a reverse stock split to make the price look more attractive is really, really silly, in my opinion. And most of the time, companies that are a penny stock or are reaching penny stock territory are the ones that do a reverse stock split, because they don't like the way it makes their stock for the company look. So, I mean, that's it. That's my 2 cents on the reverse stock split. I believe that's their mentality on it, as many companies do when they do a reverse stock split. It's they don't like the way the company is looking for them. But, you know, I really don't like the move. I think it shows a sign of weakness. And I don't think it benefits anyone to do a reverse stock split. But yeah, all right, that's pretty much it, y'all. Let me know your thoughts in the comments. I mean, what are your thoughts on a reverse stock split? I mean, no big deal. Do you think it's a good thing? I personally just don't agree with it. I don't like the idea of it. But all right, that's it, y'all. So y'all take it easy now, and see you in the next video.